It's Wednesday, the 10th of November 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
A massive day for Australia's gold miners. That's our main story today. Also this morning, Bitcoin hits a new record, National Australia Bank's profit surges, and legendary investor Warren Buffett keeps selling shares. Then stay listening for Sean's chat to Belinda Allen, senior economist at Commonwealth Bank. But first, Sean, a very big day for gold companies, with market leader Newcrest buying Canadian gold digger Pretium for $3.8 billion and a major new find in Western Australia.
It sure was, Michael. Let's start with Newcrest. As you said, it will pay 3.8 billion Australian dollars to buy Canadian gold miner Pretium. Pretium's board has recommended the deal, and it's hoped to be completed in the first quarter of next year. It's a big move by Newcrest, which really has been criticised for not having enough future gold production in the pipeline. In fact, it's actually tilted somewhat towards copper in recent months. Until yesterday, its boss Sandeep Biswar had played down the chance of doing a deal. But it's now clear Newcrest wants to remain a major producer of the precious metal. Newcrest undoubtedly is a first-class gold miner and operates with low extraction costs relative to many of its major competitors. Its mine at Cadia in central west New South Wales is absolutely world-class. Its decision to buy in Canada means its gold production will increase by 300,000 ounces a year, or about 15%.
I mentioned there was a major find in Western Australia. Chalice Mining's share price jumped 32% yesterday after they reported the huge discovery.
An amazing share price jump. In the end, it settled at 29% higher. Look, Chalice Mining said it's made the largest nickel sulfide discovery globally in more than 20 years and the largest ever in Australia. The Gonville deposit, just 70 kilometres northeast of Perth, contains 10 million tonnes of palladium, platinum and gold. It also has 530,000 tonnes of nickel, 333,000 tonnes of copper and 53,000 tonnes of cobalt. Massive number. Now, all those numbers come from Chalice Mining. It well and truly puts Chalice in the green metal space, makes it a major player, and share price jumped so much that its market cap went beyond $3 billion yesterday. It was a huge day for gold miners.
It's pretty amazing when you think about just how big Western Australia is, that such an enormous discovery could be made so close to Perth, within 70 kilometres.
That's right, and Chalice is still very confident about finding more as it extends beyond that Gonville region.
Yeah, it's an amazing story, that one. So how did markets perform yesterday?
Well, the S&P ASX 200 lost 0.2% to finish at 7,432 points. Among the large caps, Commonwealth Bank, Westpac and ANZ all fell by more than 1%. BHP and Fortescue Metals did well, as did CSL and Afterpay, which was up 2.4%. Overall, Michael, financial, energy and telco stocks underperformed, while tech stocks and materials companies outperformed. The Aussie dollar is trading at a touch over 74 US cents, and Bitcoin hit a record high of almost 68,000 US dollars a unit yesterday. It was up 7.5% in just 24 hours. Several other digital currencies were also higher. Now, it comes as the total value of the cryptocurrency market has now gone beyond 3 trillion US dollars. Keep in mind, this is a market that's only been around for 10 years, and it's up 400% this year alone. Now, the big four are Bitcoin, Ether, Binance Coin, and Solana. There's still plenty of cynics who don't believe there's much substance to the cryptos, though, as we saw last week, Commonwealth Bank said it would allow investing in Bitcoin, certainly giving the market a degree of credibility in Australia. And Michael, as you know, I'm part of that cynic category, but you really got to follow the money, so maybe I'm going to have to change my mind.
Yeah, watching Bitcoin has just become pretty much a spectator sport. And for those of us who don't quite know enough about it to invest, it is just extraordinary what's been happening lately.
Absolutely.
How did global markets perform overnight, Sean?
Well, Michael, Wall Street fell for the first time in almost 2 weeks, led lower by Tesla, which dropped by 11% following Elon Musk's poll about whether he should sell 10% of his stake in the company. In early afternoon trading, all the major indices were lower. European shares were also down, ending an 8-day winning streak.
We'll be back in a moment with the rest of the day's business news. Sean, there's plenty to talk about this morning. National Australia Bank, the country's second largest bank and fourth largest company, has reported a full-year cash profit of $6.6 billion, up 77% from last year's COVID-affected result.
Yes, Michael, and undoubtedly the highlights were its mortgage and business lending operations, while the institutional business underperformed. While the bank's lending book improved, the bottom line was helped by a reduction in the amount set aside for bad loans. Chief Executive Ross McEwen said the bank was well set up for the expected post-COVID bounce. Interestingly, given all the debate about climate change at the moment and the role of fossil fuels, National Australia Bank says it will continue to finance greenfield gas operations in Australia, saying it was necessary to underpin national energy security. Now, the bank's share price initially jumped 1.5%, then fell to be more than 2% lower before closing less than 1% down. NAB share price is up more than 50% over the past year. Shareholders will receive a dividend twice the size of last year, and Mr McEwen, the CEO, will take home twice as much as last year at $4 million.
All right. Now, Scott Morrison, the Prime Minister, was out and about yesterday spruiking what is probably best described as a newfound love of electric vehicles.
Who knew ScoMo loved electric vehicles? Certainly I didn't. He came under fire yesterday for becoming a supporter of EVs. He outlined the government policy. It doesn't include incentives to buy electric vehicles, which is what Europe has done pretty much across the board, but it does include about $250 million to roll out charging and hydrogen refuelling stations across the country. Mr Morrison said he wanted 1.7 million low and zero emission cars on the roads by 2030. Of course, Michael, it's a total backflip from the Prime Minister, who was very critical of electric vehicles in the last election campaign. Also, the Morrison government has pledged up to $1 billion to develop low emissions technologies via the establishment of a fund that will focus on developing emerging technologies. The fund will focus on technologies such as carbon capture and storage and methane reducing livestock feed.
Now, Sean, we've been talking about price pressures and how they're flowing through the economy. We had Domino's and Ingham's last week saying input costs were on the rise. Now a NAB survey has backed up those claims.
Yes, inflation pressures are being reported throughout the economy, with high shipping costs, supply bottlenecks and labour shortages hitting prices, according to the National Australia Bank Monthly Business Survey for October. The survey says input costs are now at their highest level in more than a decade. That puts margin pressures on business and pressures around supply. According to the survey, more than 2 in 5 companies reported availability of materials as a major constraint. The big question is whether all that feeds through to consumer prices. Certainly, consumers have picked up spending in some areas. The latest Commonwealth Bank Household Spending Intentions report shows an improvement in travel, transport and entertainment spending during October. Now, Michael, as an aside, straight after the show, I'll be chatting to Belinda Allen from Commonwealth Bank about that report. You put all that together and you wonder why the Reserve Bank, and many other central banks in fact, have argued that these pressures are just short term and inflation will get back to normal. The National Australia Bank survey particularly adds weight to the argument that price pressures are much more than transitory.
Now, James Hardie's been on a good run. The company's profit has surged during the 6 months to the end of September, up more than 180%.
Business is strong across Europe, North America and Australia and New Zealand. In fact, it was the 4th consecutive quarter where all 3 regions delivered double-digit sales growth and double-digit pre-tax earnings growth. James Hardie is in the top quartile of performers on the share market over the past year, up 40%, notwithstanding yesterday's slight drop. Building material companies aren't quite as sexy as technology and health stocks, but the government subsidies to keep construction operating around the world has flowed through to these organisations, and they've done really well. Now, Boral, which is now under the ownership of Seven Group, has seen a 33% rise in its share price this year. Plumbing supplies group Reece is up almost 40%, and New Zealand-focused Fletcher Building is up 30%.
And some very good news for the people of New South Wales, with the state reaching the magic 90% mark for fully vaccinated people over the age of 16.
Yes, it's been a remarkable couple of months with regards to the vaccine rollout, particularly considering how poorly it began. They hit that mark yesterday as they recorded more than 200 new cases. Meanwhile, Victorian Premier Daniel Andrews yesterday said unvaccinated people would be barred from entering non-essential retail from the 24th of November. And Queensland Premier Anastasia Palaszczuk said unvaccinated music and sports stars won't be able to play in front of crowds from mid-December in her state. Victoria recorded 1,069 cases yesterday. There were 18 new COVID cases in the ACT. And finally, the Northern Territory exited lockdown last night.
Okay, Sean, what's making headlines in today's news media?
Well, not a lot around this morning. Reuters is reporting that General Electric, once the most powerful conglomerate in the world, will split into 3 public companies as the group strives to simplify the business, pare down debt, and breathe some life into its battered share price.
Running through some of the other stories around today, the Financial Review is reporting that global accounting giant PwC used university students with no accounting experience to do audit work for ASX-listed companies. The unqualified workers cost less and had limited training and resources and were based in an office in Western Sydney. PwC earned $468 million from its audit work last year, and all the big firms face a crackdown on audit standards. PwC says the unskilled worker base did not affect work quality, though.
Outdoor clothing retailer Kathmandu says there's going to be a shortage of wetsuits this summer because the group just can't get enough of them. Kathmandu says its profit was hit by extended lockdowns in the 3 months to the end of October across Australia and New Zealand, but Chief Executive Michael Daly is upbeat about the run into Christmas.
Yeah, along the same lines, Scentre Group, which owns the Westfield malls across the country, said customers are returning to bricks and mortar shops and occupancy rates are at 98.5%. CEO Peter Allen said over 95% of stores in the Scentre Group are now open, with rent collections on the rise.
Cooper's Brewery said beer volumes were down around 8% in the first 4 months of the current financial year due to lockdowns. Cooper's has about 5% of the national beer market. Of course, the big two are Carlton and United, which is actually owned by Japanese group Asahi, and Lion, which is owned by Kirin, another Japanese brewer.
And finally, Sean, PointsBet, the online gaming site, has been recommended for a gaming license in the state of New York, potentially the largest gambling market in the US. It still has some hoops to jump through, but its share price ended 6% higher yesterday. What's the key overseas news this morning, Sean?
Well, Google's parent Alphabet rallied yesterday to reach $2 trillion in market value for the first time. Google's advertising business has done particularly well this year, and Alphabet is the best performing of the big 5 FANG stocks. That's Facebook, now known as Meta, Apple, Amazon, Netflix, and Alphabet. Alphabet hit $1 trillion at the beginning of last year and is now only behind Microsoft and Apple, both of which are worth around $2.5 trillion. Warren Buffett, the world's greatest investor, well, probably, is selling shares. During the 3 months to the end of September, his company Berkshire Hathaway was a net seller of equities for the 4th straight quarter. Now, last time Warren Buffett did that was back in 2008. It indicates that the 91-year-old is struggling to find opportunities in equities. As I said earlier in the show, follow the money, and Warren Buffett has plenty of it. And finally, China's leadership is holding a 4-day gathering of about 200 Communist Party chiefs in Beijing, which will extend President Xi Jinping's reign. The 68-year-old removed term limits on the presidency back in 2018, and he's heading towards an equal footing with the founder of modern China, Mao Zedong, and his predecessor, Deng Xiaoping.
Now, Sean, we've mentioned it 2 times already, but let's get a third plug in. Up next is the Daily Interview, and today you're speaking to Belinda Allen, Senior Economist at Commonwealth Bank.
Everything you want to know about people's spending intentions in all sorts of areas, Belinda knows about. They've just released their October Housing Spending Intentions Report. It's got all the data that the bank collects about spending patterns. Really, really interesting.
Yeah, and considering the bank processes 40% of Australian consumer payments, they tend to know what they're talking about. It's a really interesting chat. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 10th of November, 2021. Make sure you've followed Fear and Greed on LinkedIn, Twitter, and Facebook, and you can always find more information and sign up for our free daily newsletter at fearandgreed.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.